I often get, are there specific days of the week that are better than other days statistically for trading, especially short-term oriented trading? And it really depends on what kind of market environment we're in or what trend we're in, because those days are slightly different in a bull market versus a bear market. Okay. And so if we are predominantly in a positive market environment, right, the best, statistically, the best day of the week is Tuesday. Now, this edge that Tuesday has over all of the days of the week is extraordinarily small. So it edges out other days statistically over long periods of time, very marginally. But it's important to know that, I believe. All right. Now, if we get to a bear market, your most negative days actually are Monday. Okay. And a close second is actually Friday. So and the reason for that is because oftentimes in a bear market, it's very news sensitive. And in a bear market, you're really dealing with a preponderance of negative news. And the negative news that accumulates over the weekend causes additional selling, usually on Monday, as a reaction to the negative news that's accumulated over the weekend. Friday is a second close to statistically being a heavy negative day during bear markets, because there are a lot of people who have open positions throughout the week that might want to pare down or actually completely exit those positions and not have over the weekend news exposure into Monday morning. So Monday morning tends to be, in a bear market, a big gap down day, okay, statistically. And Friday tends to be a sell-off day into the weekend. So that's important to know. Let's take it one step further. Are there specific periods of the month that are more interesting and deliver more opportunities than others? And yes, it's always around the middle of the month, and not always, around the middle of the month and the latter part of the month into the beginning of the month are two times that statistically deliver greater moves. So moves up or down that ignite from the middle of the month will tend to be more significant. Also, moves that go up or down, the direction doesn't matter, but moves that are that ignite from the area of the month, is sort of the last days of the month into the beginning of the next month, that period that bridges one month into the other. If a move ignites from that period, like we're experiencing in BTC now, those moves tend to statistically be more powerful and more enduring than if the moves originate from other periods of the month. Right now, guys, listen, I've been trading for 40 years in total. Now, that's including the idiot years. My professional years, 35 years. All right. So I have seen cycle after cycle after cycle after cycle. And this witnessing multiple cycles, many cycles over and over and over again, is what I believe gives me a certain edge, an edge over younger and less experienced market players who may have an academic knowledge of cycles that have happened in the past, but have not had true experience of cycles. And so I say that to say this, guys. There's virtually nothing at this point the market can throw at me that surprises me, that I haven't seen hundreds upon hundreds of times. And that's experience. And I'll close out this point by saying that it's important for you to understand that experience is the number one goal when it comes to this. And people go down the wrong path when they believe, when they start this activity called trading, the number one goal is to make money. And although that is the ultimate goal, to be profitable, but it can't be the goal that you strive for in the beginning, because you can't make money in the beginning. And guys, the reason why there are not 50,000 people logged on here today is because this is my message. I give it to you real. I give it to you from 35 years of experience trading the markets virtually every single day. I don't sell you pipe dreams. There are people who might tell you that I do, but I am telling you from the horse's mouth that I don't. I tell you that there's a 92% failure rate in this business. I tell you that the odds are against you. I tell you that you're going to lose first. And so your first goal can't be to make money, because you haven't become something different from what you are yet. And to become something different requires change over time. All right. And so you want to stay who you are when you first come to this game, and keep all of your lack of discipline, keep all of your lack of experience, keep all of your baggage, all of your faults, all of your idiosyncrasies. And you want to keep all of those things and become profitable right away. It doesn't work that way. First, you have to lose those things. And the way you lose those things, the way you lose your baggage, the way you lose lack of discipline and gain discipline, the way you lose bad habits and gain good habits, is through loss. All right. And you can't be instantly good at something without first becoming experienced with it. Right. And in a way, you have to also experience every possible way to lose first before you know the correct way to win. You discover how to win in this business, all right, by first discovering how to lose. So it is easier to discover what good trading is not than it is to discover what good trading is. And so you have to go through the process of negation. Not this, not that. That's not it. That's not it. That was a mistake. That was a mistake. And as you eliminate what is clearly not proper, over time, you arrive at what is proper. But you can't find that needle in the haystack if there are too many other needles of haze around it. So you have to start eliminating the haystack, making that haystack go down lower. That increases your odds of, there it is. There's that needle. But if the haystack is too tall and you haven't eliminated anything, you're just not going to find it. All right. So we were talking about days of the week, then times of the month. I do want to end with this months of the year. So statistically, which months of the year are more vibrant or more bullish in overall markets? The equity markets in particular. And I will tell you that statistically, I would say that April is a very bullish month statistically. And statistically, April is likely to be statistically one of the more bullish months of the year. Not every year, just statistically over long periods of time. And September statistically is the worst month of the year. So if you were to go back to last year, you would see that that sort of panned out. Okay. I would say that the best period of the year, not just month, meaning more than a month, the best period statistically is October, November, December, but not all of October. It's sort of like middle of October through December. That statistically is a bullish period. Now, this year, that was partially right and partially wrong, or last year, I should say. So we got a big giant bull run into November, right? Right on point. But the hawkishness of the Fed and the surprise jump in inflation sort of put the skids on that bull run, and we started to basically decline for the most part. So it's interesting, you know, these pockets of time are interesting. I don't want you to overly dwell on them, but sort of knowing them in the back of your mind can give you a slight little edge. Okay.